Welcome to the Wall Street Crossover Show. This is the last one for the year, so hopefully we'll be back in the new year. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, how the devil are you, sir?
Yeah, very well, thank you, Nick.
And we've got Mr. Zach Meir, analyst at Zach's Cafe.
I'm glad you just about remember that.
Yeah.
I was just passing.
Excellent. Well, I thought this is the last one for the year. We'd have the three-man team. If you're watching for the first time, we've got a number of slides to go through. Let's kick off with the first slide. Data released over the European session. Over to you, young Darren.
Okay, well, the first data point, and probably the most important one on the day, German industrial production numbers for October. So it is a lagging indicator, but they came in at plus 0.2% against the expectation of plus 0.7, so significantly lower. And, you know, it just tallies with our theme that there's very uneven recovery in the Eurozone, patchy at best, even in places like Germany, and that the ECB needs to do more. China eased again, easing the reference rates for the yuan against foreign currencies. They've been quite quiet on that front recently, so you know, maybe we'll see more of that in the weeks up to the Christmas holiday. Staying in Asia, we heard from Governor Kuroda at the Bank of Japan in a speech early this morning. The main theme, really, you know, their continued rose-tinted view, in my opinion anyway, of the economy. He says there's no need for negative rates in Japan because their QE is hitting the target. Well, if it's hitting the target, I'm not seeing it. And then this afternoon, Mark Carney will speak in Europe. He's at the European Parliament addressing their economic committee. Obviously, we've got the Bank of England meeting properly on Thursday. So I don't suppose he'll say anything too dramatic. Nonetheless, you know, he's a central bank governor. The market will be waiting to hear if he gives any hints about timings of a possible UK rate rise or otherwise. And then in terms of what we can expect across the rest of the week, we've got China balance of trade data for November on Tuesday. Remember that we've seen some fairly disappointing import and export numbers from China over the last couple of months, so everyone will be glued to that. Eurozone GDP for Q3 also on Tuesday. And then we have Chinese inflation data, both PPI and CPI on Wednesday. And as I already said, the Bank of England MPC an interest rate decision on Thursday. So a reasonably full calendar, or at least what data there is important over the balance of the week.
Understood. Let's move on to European movers this morning. What's caught your attention here?
A couple of significant fallers. First of all, Electrolux, Swedish household goods manufacturer, ticker ELUXB. We've got the B shares here, trading 213 Swedish krona 50, down around 10.75%. GE of the US, General Electric, has terminated the deal to sell its appliance business to Electrolux. Was rumoured to be worth around $3.3 billion. But it's basically, they couldn't get the deal past the US
regulatory.
Justice Department there, so that they pulled the plug. And here in the UK, Serco, SRP, the ticker here, 106.5p, down around 6.8%. So servicing an outsourced group does a lot of work for the UK government, but it's basically given a big bad profits warning. Says its earnings may drop by as much as 50% in 2016. The group has fewer contracts and it needs to invest in its business to win
Sounds
more.
like a little bit of a mini car crash there, and rights issue or some cash raising to invest in order for it to invest more, presumably.
Yes, I think that's quite possible, Zach, because you know it's going to be squeezed in terms of cash flow now. It's not really going to be in a position to be spending too heavily without probably either raising some cash or or cutting dividends, etc., etc. So.
Understood. Let's move on to M&A, rumours and movers.
Okay, well, I thought, as you say, it's the last show for the year. I thought we'd take a look back and see what sort of a year it has been for M&A, 2015. So I don't think it's any great surprise that the M&A value of the deals announced has soared during 2015, and as of the end of November, the tally stood at $4.304 trillion. That's according to research from Deal Logic. On Wednesday last week alone, we saw 112 deals announced, quite a phenomenal number. Many, it's fair to say, were between smaller entities, but the total value of those 112 deals was still $8.5 billion. US M&A accounts for almost half of the total of deals done for the year, with $2 trillion worth of business done so far. And that's the first time that $2 trillion figure has been reached in a calendar year. The previous high had been broken back in September, and total and estimates for the final total of M&A deals for 2015 extend up to $4.7 trillion. It's not all one-way traffic. It's not just mergers and acquisitions, though, because there has been some new issuance too. So as of the end of November, we'd seen 63.8 billion of new dollars, that is, new money raised by IPOs in 190 deals. A bit slower in the US, probably tells its own story, but 168 deals in the US, which raised a much lower $30 billion, and that was the lowest figure since 2009. There have been some big deals in the States, not necessarily, though, raising fresh cash. I think there's a slight contradiction there, but it's worth pointing that out. 2015 has seen 9 deals valued at 50 billion or more. I think that's quite a significant figure. And then 58 deals with a value of $10 billion or greater. Goldman Sachs has remained top of the pile in terms of advisory fees. JP Morgan in second place and Morgan Stanley in third. So, no surprise to see the American trio there, top of the Advisors League.
Understood. Let's move our attention to US data points to keep an eye on.
So today, a very quiet day, no real data to speak of. Jimmy Bullard, Fed Governor, is going to speak later this afternoon. He's giving a talk in Indiana around 16:30 GMT. And then as far as the rest of the week is concerned, it's all loaded towards the back end. So we've got wholesale inventories for October on Wednesday, weekly jobless claims on Thursday, then producer price index for November on Thursday, and retail sales for November on Thursday as well.
Understood. Let's move on to US pre-market movers and some chart points.
Okay, well, we've really had, apart from the M&A outright, it's also been a year where the activist investors in the US have featured very heavily, and they appear to be ending the years in the same way they started. So Pep Boys, PEP Boys, PPY, the ticker in the US, that's $17.03, trading up around 8.5% pre-market. It's an automotive parts distributor and fitter. Carl Icahn on Friday announced an 11.2% stake in the business. He fancies getting Pep Boys to merge with Auto Plus, which is a subsidiary of one of his trading companies. It's the same sort of business, but he sees Pep Boys as being an ideal acquisition target for Auto Plus. So I'd imagine that he's bought 11%. He owns the other company. He's probably going to try and sell that deal pretty hard and probably get his own way. And then the other stock that's caught my eye today, I never know quite how to pronounce this, but Chipotle Mexican Grill, CMG in the US, $518.70, down 7.5% today. And the group issued a fourth quarter profits warning, and that came hard on the heels of an E. coli incident-related slump in sales. It says that sales will be down for the next quarter between 8% and -8% and -11%, whilst November sales had already fallen by 16%. Right. So, the bad. I
assume that's a restaurants, is it?
Yeah,
Chain of restaurants?
Yes, it is, yes. A chain of sort of casual dining restaurants in the States. Yeah.
Right. In terms of chart points, these are the cash levels.
Actually, on that Chipotle, we've got one in London Wall now.
Oh, really?
Yeah. But yes, maybe not now. But on the levels to watch then, obviously European markets have rebounded somewhat this morning. So as far as the FTSE is concerned, we're looking at 62.50 on the downside now, plays 63.24. The DAX has rallied probably the best of all of the European indices this morning. So 10,860 now, plays 10,955 there. S&P and Dow had a strong session on Friday, so we now play 2080 on the downside of the S&P, plays 2098 to the upside, and in the Dow 17,800 and 17,910 of the
So the FTSE, the real underperformer there. I mean, that's just below.
Yeah,
it's like about 150, 200 points lower than it should be, given where the other ones are.
It is lagging, Zach, and I think there's still that hangover from what's left of the mining sector still dragging it down, basically.
And the oil sector.
Yeah, but both.
And the banks and the list goes on.
Markets.
Yeah.
Okay, in terms of currencies.
Okay, well, the euro is drifting back down to earth gently. So we've got 108.11 on the downside, plays 108.58 to the upside. Aussie dollar, US dollar, Aussie holding its own here, 72.88 on the downside, plays 73.20 to the upside. Dollar yen, yeah, the yen looks to be giving way once more. So 122.95 is our downside level, plays 123.68 to the upside, and cable seems to have settled back around that 150 handle with 150.35 on the downside, plays 150.80 to the upside. Obviously, Mr. Carney to speak this afternoon, and the Bank of England on Thursday. So if I was watching any of the currencies, I think it'd be cable.
Cable this week. Okay, let's wrap up with a final slide in focus. What's in focus today?
Well, I just wanted to leave people with something to ponder as we end the show for this year and not too far off ending the year proper. So what we are watching, monetary policy divergence, which it's obvious that we're going to have now with the ECB cutting rates and the Fed set to raise them. What does it mean, and is it going to change market relationships? Well, the markets moved on Thursday as if the ECB had raised rates, and what I mean by that is equities sold off and
currency
rallied. And Eurozone bonds, which we might have expected to see improve as interest rates are being cut, actually sold off in line with the trend in the US 10-year. So I think this period of divergent monetary policy between the US, Europe, Japan, and potentially the UK as well is going to throw up some interesting contrarian moves, I think. And when you've got a combination of central banks doing different things and crowded trades, you may have to think long and hard about what's going to happen rather than just expecting it to conform to the usual norms.
Understood. Darren Sinden, market commentator, Admiral Markets, thank you for that. That wraps up today's Wall Street crossover show. That's the last one for the year. We'll see you in the new year. Thank you.